fact, make for over 80% of the total volumes of the Indian auto industry. However, the three biggest passenger vehicle companies by volume are very much part of the Auto Expo. Maruti is likely to showcase the four-wheeler drive, mini SUV and the Baleno crossover. It is also expected to reveal the YY8, its fully electric SUV concept. Hyundai will formally launch the electric Ioniq 5 and display the recently revealed Ioniq 6. Tata Motors also has grand plans, launching the electric variant of the Punch. Its showstoppers will, however, be the Curve and Avinya concepts revealed last year. Interestingly, the number of visitors to the Auto Expo have remained the same in the past three events. However, with the car sales again booming after a very rough 3 years, the industry is hoping for a bumper response which can catapult their sales this year. Bureau Report, Business Today Television.
The Auto Expo will also be host to over 800 component companies from 15 countries. It's big business, with India's component industry having grown nearly 35% to 2.65 lakh crore rupees in the first half of this financial year, riding on domestic demand, particularly from the passenger vehicle segment. Business Today TV's associate editor Chetan Bhutani caught up with Sunjay Kapur, president of ACMA, and spoke about the Expo as well as India's component industry and its performance.
34.8% growth in the first half of FY23. How are you anticipating the rest of the year, and what do you think accounts to this growth? Do you think the electric vehicle revolution or the passenger vehicle demand revolution? What are you looking at here?
So I'd say, definitely EV is a growth factor globally. However, in India, we've seen a growth in the passenger car as well as commercial vehicle segments. And, we hope to see that continue. We've had a good festive season. We saw two-wheelers come back up, though we saw a little bit of a dip in December, which we hope revives again in January. And we hope that the growth can continue if nothing extra or out of the ordinary happens. If there are no supply chain disruptions, there are no lockdowns, etc., nothing, like I said, extraordinary or out of the ordinary happens, we hope to see the growth continue.
Right. Three global events I'd like to highlight quickly, as of course the Russia-Ukraine war, the recession fears, and of course the COVID situation in China. Are these a cause of concern, and what are you doing for the industry to cushion itself so that the impending fears really do not catch up and the growth momentum continues?
So, as an industry, we're very resilient. We have been through COVID. We have learned how to manage businesses in the time of COVID, and we hope that those lessons have taught us well, and we hope that the lessons that globally we've learned have taught us well. So as long as there are no lockdowns and supply chain disruptions, in that sense, we should be okay. With regard to the conflict, I don't know where the end of that is. We will definitely see some schedule changes in Europe, or we're already seeing them because of the fact that the conflict hasn't, died down or hasn't stopped. So that is a challenge for us. And again, for us, it's about building scenarios, about being resilient. Fortunately, the macros in India are good. The macros in India are strong. Balance sheets are not highly levered, and therefore we should be able to, ride this wave out and hope that growth continues.
Right. The imports from China also, I think, remains a concern for the industry. Nearly 17% growth, if I'm not mistaken. So, how are you tackling that? What components do you think really need to be more futuristic in India and not be really troubling the Indian industry, and so that we can reduce ultimately the imports from China?
So, again, we talked about this. The imports from China are mostly towards electronics, and that's something that we as an industry are investing in heavily. We're looking to localize electronics. We're working very closely with other industry bodies like ACMA. We're working closely with OEMs. We're working closely with the Government of India, with the Ministry of Heavy Industries. Actually, they're very supportive of what we want to do in terms of localization of electronics. And as soon as we can, or as we go on and localize more electronics, we will reduce our dependence on imports. And that's really the key to our growth.
Those were my last two set of questions. How are exports looking like? Again, good growth momentum, but yes, still needs to be better. What is the association doing with respect to boosting further exports?
Well, exports, are very dependent on what happens in the economies outside of India and globally. If the US goes into a recession, which they're talking about, then we will see an impact on exports. Fortunately for us, the domestic industry is growing very well, so we should see a little bit of a balance there.
For import or export?
So today, the first half saw $10.1 billion of export and $10.1 billion of import. So it's leveled. Last year, of course, we had a trade surplus in terms of exports. We had 19 billion and 18.3 billion in terms of imports. This year, so far, we've seen an equal, which is also a positive because earlier we've been a net importer. So we hope that this trend continues. We hope again that we can localize more and therefore drop our dependence on imports.
In a big win for Chanda Kochhar and her husband Deepak Kochhar, Bombay High Court has granted interim bail to the couple, terming their arrest by the Central Bureau of Investigation as illegal. The former MD and CEO of ICICI Bank is to be released on a cash bail of 1 lakh rupees.
17 days after their shock arrest, Chanda Kochhar and her husband Deepak Kochhar have been allowed bail by the Bombay High Court in the Videocon loan fraud case. The court concurred with their plea that their arrest by the CBI was illegal. The duo are to be released on a cash bail of 1 lakh rupees each and have been asked by the court to cooperate with the CBI. The court ruled that the petitioner's arrest was not in accordance with law and not in compliance with Section 41A of the Criminal Procedure Code.
Completely illegal. The basis of that was Section 41A read with Section 41B2. Section 41A expressly stipulates that if a 41A that the police must in offences punishable less than 7 years mandatorily issue a 41A, and so long as the accused in response to the notice attends the office and cooperates with the officer, there is an express statutory bar on any kind of an arrest.
The pair went to the Bombay High Court to request the quashing of the FIR, arguing that their arrest was illegal. According to their attorneys, Chanda and Deepak Kochhar were cooperating with authorities from the start. Hence, their arrest was unjustified. The counsels also cited the absence of a female police officer when Chanda Kochhar was arrested. The defense also quoted the Enforcement Directorate, which had earlier stated before the Supreme Court that Chanda's custody was not required in the case. Chanda Kochhar and her husband were taken into custody last month, just 3 weeks before their only son's wedding in Jaisalmer. The family had even chartered an aircraft to fly top industrialists to the venue for the wedding. 3 days later, on December 26th, Videocon Group's Venugopal Dhoot was also detained on corruption charges in the 3,250 crore loan case. Bureau Report, Business Today Television.
On that note, let's slip into a quick break. When we return, Edelweiss Radhika Gupta sharing her outlook for mutual fund investors.
Make your media plan smarter with India Today Live TV on your connected devices. Amplify your brand with 100 million smart internet viewers. To advertise, mail us at sales@aajtak.com.
Welcome back. IT bellwether TCS kickstarts Q3 earnings season, surprises Street with a 5.3% sequential jump in consolidated revenue for the quarter ended December. Profits too surged 4%. The software major has also announced a dividend of 75 rupees per share for the quarter. Let's hear out what the MD and CEO of the company had to say at their earnings press conference.
In terms of overall demand trends, I think the quarter has been and continues to be about different markets behaving differently. North America continues to remain quite vibrant, and overall the economic stance and customer perspective there continues to be quite supportive, if cautionary. UK is, as I said, a challenging operating environment, but our solutions are finding a lot of resonance with customers, and we are significantly gaining market share in that market and continuing to do very well. Europe is the market where client decision making is getting impacted by the ongoing geopolitical challenges there, and requires close watching in terms of how it progresses through the quarter. Overall, demand scenario has not changed significantly, but to be fair, it would take at least a couple of months more for us to actually know what the decision making is. We have gone into December with everybody being cautious, but our view is that this caution has different color across markets. So if you look at Europe, there is obviously a real big issue out there, and it would take some time for this caution to dissipate, and we need to be cognizant about that, and we'll see where it goes. But if you look at North America and UK, which together constitute about 2/3 of our revenue and probably 3/4 of our profit, the environment there is very different, very supportive. North America, while this quarter and probably maybe the start of the year might be a bit cautious, but our own view is that into the year, we should see a fairly positive one, because there is no structural challenge there. Of course, this is subject to how the whole inflation scenario plays out. But on our one-on-one conversation with clients, we think that this is a caution that is more in terms of being wary and taking a decision slightly delayed rather than anything comparable to Europe. UK, the environment is challenging. But given the fact that there is no immediate flip there that is expected, customers and industries have moved forward in terms of the decision making and are committing to large scale, sometimes cost transformation, sometimes more structural transformations along the lines of what, for example, the deal that we have announced with a leading telecom provider there. So UK, though the economic environment is bad, the decision making is much more decisive and much progressing well. So we are participating in that.
Well, good start to the week as robust global cues take front seat and command moves on the stock exchange. The benchmark surged over 1%, with Sensex snapping that 3-day losing streak, zooming 850 points to close above 60,700. The Nifty also ending above 18,100, adding 240 points. The rally led higher by the IT names today. The Nifty IT index clocked in gains upwards of 2%. Among the top gainers today, M&M, SBI Life, IndusInd Bank, TCS and HCL Tech, all ending the session with gains of over 3%. Titan, Bajaj Finserv, Grasim, Bajaj Auto and HDFC Life, some of the top laggards in trade today. Now, despite volatile markets in 2022, SIP investors were well rewarded. In fact, as per AMFI data, the contributions in SIPs are currently at record highs. What's in store for mutual fund investors this year? Will the appetite for SIPs remain? BTTV's Sakshi Batra caught up with Radhika Gupta of Edelweiss regarding the same. Here's an excerpt.
First up, help me understand, how do you really sum up the year 2022 gone by, especially when we talk about the mutual fund investors?
So I think Happy New Year to you and your team. Delight to be here. I think if I had to sum up 2022, firstly, from a capital markets point of view, I think it was, a year that taught a lot of lessons. Many investors have come into the market and into the mutual fund industry, particularly after 2020-21, where you saw a straight runaway rally, hardly any volatility. And 2022, even though the benchmark indices, as I said, were up 4%, that 4% masks a lot of drama that happened in the year.
Yes.
Whether it was geopolitical, whether it was inflation, whether it was China, whether it was tech stocks. I mean, there was a lot of drama through the year. So I think it was a year that taught a lot of lessons. And I think we're going to go into 2023, which is not going to be a straightforward year, hopefully having learned some lessons, especially new investors. I think for mutual fund investors, the sort of most heightening thing of 2022 and over the last few years is the fact that the retail investor is getting stronger and stronger. That he or she now contributes 13,000 crores a month of retail savings via SIPs. And we've seen, markets go up, markets go down, but those SIPs don't stop. So I think that's a very heartening trend. It's the coming of age of the retail investor, and I hope that trend continues. So volatility doesn't stop. The spirit of investing continues.
Okay, noted that. Well, definitely we did see the domestic investors, including the retail investors, doing much of the heavy lifting in 2022. Hopefully that, is the case in 2023 as well. But let's break it into two parts, both for equity markets and for the debt markets. What is the kind of outlook that you have for this entire year?
So I think as far as, let me start with debt markets, I think, you are coming towards the end of perhaps interest rates rising, I mean, 50, 100 basis points, 50 basis points extra may happen, may not, but you're coming close to the peak. I think interest rates are at elevated levels, and it is a good opportunity for investors to lock in yields. So that is what we're excited about. I think one category of debt funds that really has seen its sort of mojo is target maturity debt funds, which are, started with Bharat Bond, but they've essentially allowed investors to lock in yields at very tax efficient rates, yields above 7.5% now if you're locking in for 5 years plus. So I think that continues to be the opportunity for fixed income investors. And in light of volatile equity markets, I think fixed income poses a very important alternative. As far as equity markets, it's hard to give a 1 year outlook. And,
Yeah.
it would be unfair to say that the 1 year is going to be an easy one. We do think global volatility, inflation in global markets, recessionary concerns
Yeah.
will India not immune from volatility, but we're still very constructive on the domestic economy from a 2 to 3 year period.
Absolutely. In fact, I was coming to that. How would you really see Indian financial markets placed in the global context as we begin this 2023? And what could be the impact, if at all the recession were to hit, on individual portfolios? And how should one be prepared for it to be able to, safeguard one's capital right there?
So I think there are two parts. There's markets, and markets are never immune to global volatility. But if you look at economy, I think over a 2 to 3 year point of view, India is relatively well placed. And there are a couple of factors. I think one is private capex is genuinely coming back. You are seeing an uptick in consumption. And in global markets, like in the US, inflation is probably at historical highs. They haven't seen these levels since the 70s. India has sort of been able to handle this a lot better. In fact, I think some of those inflationary concerns in the Indian context are also coming down. So I think from a portfolio point of view, the way we see it is, domestically inclined companies. So whether it's your beneficiaries of PLI, whether it is manufacturing, whether it is defense, all your domestic companies that are benefiting from private capex, they are likely to do well. Your more export-oriented companies, so that is your IT services and others, might be laggards because they are more hit by recessionary factors in the US and Europe.
Okay, so how would you really advise a small retail investor approach 2023 from an overarching perspective? And then we'll delve a little deeper into the details too.
Yes, I think for retail investors, things like market timing, sector timing, etc., this is hard stuff to do. I think investment decisions should be automated. For many investors, I think the mutual fund industry has created fantastic tools. So one of my personal favorites, for instance, is this category called the Balanced Advantage Fund. It has a mix of equity and debt. It helps you do your asset allocation, gives you enough upside, but cushioning on the downside. For equity investors, again, I think SIP proves to be a fantastic tool in volatile years because you can really accumulate more units when markets falls. So I think the idea is to keep your solution simple, to have asset allocation in place, whether it's by the way of funds, and to use tools like SIP and keep moving on.
Absolutely. And I was coming to the asset allocation part too. What is the best way in which one should really look at rebalancing portfolios? Say, for example, over the last 3 years, when these gush of new investors, first-time investors entered the markets, they had all sorts of exposure to markets. They had their direct equities, they had mutual funds, whatever came their way, they did that. But in terms of rebalancing, how would you really advise if one is looking at a fresh to their portfolio, in 2023? What should be the right approach?
So I think asset allocation is largely static. The rebalancing is less important, and this is a popular point of view. I think you as an investor have to figure out a portfolio that works for you. And, a down market is actually the one to understand your risk appetite. Your personal asset allocation should be one that if the market falls 20%, it doesn't cause you anxiety. Of course, a good asset allocation will have some component of fixed income. It will have large and mid cap. And if you are evolved enough, it will have some component of silver and some component of international equities. I think the mix is very, very individual dependent, and don't try and time asset classes. So don't say this is a good year for gold, this is a bad year for international. Asset allocation is about having all the pieces there all the time.
That's where we leave it on the show tonight. Thanks so much for watching.
Sorry.
पार्टी का मम्मी का सबका कहना है भैया इलेक्शन की गेम चेंजर मेरी बहना है सारी कंट्री हमें मिल के लड़ना है पार्टी का मम्मी का सबका कहना है माना अब तक पॉलिटिक्स से रहती थी तू दूर तेरा भैया अकेला ही लड़ा है भरपूर आ मेरे संग अब मोदी से भिड़ना है इलेक्शन की गेम चेंजर मेरी बहना है देखो भैया ये भाई बहन का है बंधन अब क्या करेंगे मोदी क्या करेगा गठबंधन